welcome to the risk event for the week beginning October 9, 2023. The risk event I'll be focused on centers around the US CPI report, and just a bit of background to that report. We've seen core inflation steadily declining in the US, which is a net positive for the Federal Reserve in terms of continuing their hiking cycle. However, headline inflation has started to tick higher, but naturally so. We've seen crude oil prices rally quite significantly of recent, and I think that could then result in another elevated headline print on Wednesday. That being said, core inflation overall has been declining as mentioned. However, it's still far away from the Fed's 2% target rate. Recently, we've seen NFPs significantly beat estimates on the headline print. However, one positive is that average earnings has ticked lower, albeit marginally, which is a positive from an inflationary standpoint. Looking at money market pricing, we've seen that markets expect the Fed to hike rates with roughly a 33% probability post NFPs. So we really need more incoming data to give us some directional bias as to where the Fed is going to go. And that just places so much more emphasis on the upcoming CPI report. Looking at some technical analysis, we have the daily US dollar index chart on screen, and we can see the dollar's been really strengthening from roughly mid-July up until this point, where we found resistance at the 107.35 swing high. Prices are now below the 107 psychological handle. So if we do see an upside surprise on inflation, that could really ramp up another hike in terms of market probabilities and possibly push that towards a 50% level, and the Dixie could then rally up towards that 108 level and possibly give us fresh yearly highs. Remember, with the dollar index, roughly 57% of this particular index is euro weighted, and with the euro significantly weaker than the US economy, we could see the dollar elevated for much longer. So a lot to look forward to next week from a US standpoint.